Okay, so somebody asked me for it, so I'm gonna do some examples, okay? So today was a clear example of the standard deviations to the downside, right? So as we said, right, you go to the 5 minute, you put this, and then go through the 3 minute, and it's the same. Well, once when you see like this choppiness on the 3 minute, just stick to the 5 minutes. Okay, so when it's all choppy on the 3 minute, just stick to the 5 minute. And we had this right, and didn't touch this, but we had this. So and we can go to the 1 minute, and as you can see, we react perfectly off of this, and then we come back to this order block that it's gonna form, and then we go to the downside. So this is an example of the standard deviation to the downside and how to use the standard deviation to the downside, right? Because if you go to the to the probably the 50 minute, I think it's the 50 minute, yeah. So if you see in the 50 minute, it reacts perfectly off of that, then reacts again, and then we got a nice sell off right there. So this is an example to the downside. Um, The other day, yesterday, I think, is an example to the upside. Okay, so let me just put it here. Look, right here, just put your fib here. You go to the 3 minute and you put your fib right there. And as you can see, it rejected perfectly off of this 2.25, right? We have this shit here, right there. It reacted perfectly off of that, and this is an example to the upside, right? So as you can see, as I said, this is gonna work for your entries and your bias, basically. So yeah, you can use this, right? You would get tapped in, and maybe once you hit, I think I explained it in the other video, and then 200 points, it ran 200 points. So this is another example to the upside, okay? And then we have days like this, okay, that we just rally through and we are not getting a lot of shit, right? So this is gonna be like, yeah, as you can see, we just rally through this, right? Rally through everything. But once we rally through everything, okay, once, I mean, sometimes we can leave this. So if we don't touch this ones, then just leave it there. And if we rally through this ones, right, our bias is going to change. So in this case, imagine we didn't get, okay, not imagine, like you can see it. We didn't get a reaction off of any of these levels, right? Like not a clean reaction, like maybe could have got this, but it's not, there's not a reversal, right? And then just go to what it's called our maximum reversal point, and as you can see, it just gets rallied through, right? So then our bias, once it rallies through everything, our bias is going to completely change, right? So in this case, we're not going to be looking for reversals. We're going to be looking for a continuation to the upside, right? So you could have just taken, in this case, you could have just taken this, right? You put your limit there. You put your stop maybe here, I think. You could put your, maybe your limit here, okay? You put your 10-point stop loss, which is basically it. Yeah, 10-point stop loss right there. And you would rallied all the way up there. So you would have gotten like 200 points again, right? So that is an example of when it just rallies through, or there's no clear like fib. Okay, and let me show you a bunch of other examples. So in this case, this is gonna be our last swing, right? Right there. This is gonna be our last swing. So this, in this case, you can see we rally through this, then you would wait for it to come to our 4 reversal point. Once we rally through all of this, just gotta be patient, right? So in this scenario, just be patient. Just do like, yeah, just be patient, because in this case we rally through and it wasn't even New York Open, okay? And then in New York Open, once we opened, we touched this, right? The four key open, and we got this rejection block. So you could have caught all this, and you could have put your maybe your TP right at the liquidity, right at the buy side liquidity, and it would have been 100 points. And I think on putting this stop here, which is only 15 points, I think you would have gotten. Wait, it would have been, let me see. Okay, so 12 points of stop loss. It would have been 1 to 9 risk to reward ratio for 100 points. So yeah. This is another example to the upside. Okay, so in this case, once we see it like not clear enough here at this zone, it's not gonna be clear enough. Just wait for the four reversal point, and that's it. Let me show you another example. So in this case, right here, this is probably, in this case, you can see there's really like a lot of choppiness. Maybe take this as your last swing. So you can see it by a few ticks. Sometimes it misses by a few points. Okay, so, but if you see a nice reaction, right, and we continue to the upside, even though we missed it by a few points, it's gonna be also fine. Okay, because oh shit, maybe I just put it wrong. Yeah, this would be the last swing. So yeah, you would have gotten a reaction. Yeah, sorry. So yeah, let me explain. So yeah, this would not be the last swing to here. This would be the last swing, right? Because we created this high and then this low, and yeah, we get a nice reaction off of 2.25. You just put your limit right there, and just put your stops here. It would be a 10-point stop loss for, again, like 1,000 fucking points, really, like 600 points if you wrote it all the way up there. So it would be in 800 points all the way up there, right? This is the level I called out like a few days ago, which was previous week low. Actually, you would have caught all of this, which would have worked for like a scalping. So if you caught it, imagine you just caught it off of here, just put your limit there. This would have been 1,000 points. Okay, so that is another example to the downside. And then this day, you could have also catched this huge sell-off just using standard deviations. Let me show you. As we said, just use this last swing. So let me just put this last swing to here. As you can see, we touched the 2 point mark right there. We reacted perfectly off of there. You could have taken your trade maybe here, right there, and again, you would have caught literally 1,000 points just based on the standard deviations. All of this fell down that happened on Wednesday. You could have caught it just based on the standard deviations. So again, this is um, a cell model, right? And then, but yeah, remember, okay, because I think I got a question on that. Remember, sometimes if it's not clear, then just don't take it. Okay, we are not trying to force trades. We are not trying to like do trades of 2 point or 2.25 ticks. We're not trying to do fucking like trades, bad trades. Okay, we need good trades. We are looking for good trades on good win rate. Okay, just so maybe the days that are choppy, maybe the days that don't really work for like the standard deviations, because it's not 100%, right? So maybe those days, maybe just leave them be. You don't trade them, or you trade like maybe you can just